Now, there is a major trend that you need to be aware of, and that is 5G. Now, in early 2010s, 4G was first developed, and with 4G, internet was so fast, right? But 5G is going to be a few times faster than that. In 5G world, we're going to have virtual reality, we're going to have smart cars, Internet of Things. And Singapore, we are trying to be a smart nation. That's why 5G is a definite drive. So today we'll talk on two companies. First is actually on Netlink. Netlink does cabling, does fiber optics, and Netlink is definitely a participant in this 5G revolution. The second company is Starhub. Starhub is one of the three major telcos in Singapore, and I'm sure you are familiar with them. So this topic of Starhub and Netlink, who's better? You're going to find out right now. Hi guys, welcome back. Now let's start today's discussion firstly with Netlink Business Trust. Now Netlink Business Trust, I'm sure you've seen them also on the roads, in some manholes, drilling stuff, simply because they're in the fiber optic space, cabling space. So Netlink's business, serves not only in residential but also in business points, and also, they also rent out certain facilities to telcos itself. That's under the non-business access points. So let me show you a summary table of its progress in terms of its profits over the last 3 years. What do we realize? Residential connections have been growing steadily, correct? And if we were to follow what is being built, around Singapore, you realize that Tengah is going to be another big BTO space. Punggol has a lot more BTOs coming up, so residential will continue to grow. What about for the last point, non-business access points? That is where it actually partners with telcos, provide its cabling services to them. So there's actually a lot of revenue sources, but the bulk of things actually still come from residential. Now 2020 was a fantastic year for Netlink, simply because there was job assistance scheme whereby government actually subsidized some wages. So the net profit after taxes was 95 million, a big jump from the previous year, which I have a full chart for you to see in this table. What we can realize is since 2017 when it IPO'd, income dropped but steadily recovered since 2018. That's why when you look in terms of dividends, you realize that they've been pretty steady, paying out about 5% yield. And what I've boxed up for you to see over here is also the first half of the year they've actually declared dividends, and this rate seems to be increasing, which is pretty good news. So if you're a shareholder, you will realize that share price has been trending up slightly because dividends have been getting stronger and stronger. But while Netlink is a strong dividend paying player, let me highlight some risk for you just in case you're already an investor in Netlink Business Trust. The first risk is actually in terms of system failures. What we can see in this summary table over here is that for many times in the year, they have been actually fined by IMDA. And one of his fines was actually $150,000. And that is actually, the sixth time in 5 years. So fines have always been levied, for service disruptions. But Netlink's real risk, if I'm not wrong, actually comes from competition. I've actually found a new competitor on the block. Probably still a small player. That's why when we were trying to do research, within the team itself, we were struggling to find a lot of information on it. And that's actually in SP Telecom. Now, SP Telecom is actually building a new software-defined network. And this is actually meant to rival Netlink Business Trust service. SP Telecom is actually a joint venture between ST Engineering and SP Group. And they actually started to build the network since 2020. They've started targeting CBD areas, and if it's successful, they'll actually be moving towards the rest of Singapore. So therein lies the question, would this competition put pricing pressure on Netlink Business Trust? Because Netlink Business Trust, for the residential side, seems like a monopoly. But the main thing is when we pull up back this chart and you realize that they actually charge per month recurring income, IMDA actually kind of has certain control because there's an ICO agreement. And my interpretation of things is if there's a new kid on the block, that puts more bargaining power with government authorities. They have two players now. Not only Netlink Business Trust is able to provide solutions, but there's now an alternative with SP Telecom. The key part is there's going to be a review in 2022. So while dividends look to be climbing steadily, if that review requires Netlink Business Trust to reduce its prices, cuts its profits, then you should expect that dividends might not grow subsequently. So that's a key risk to take note of. Now I know many of you are interested in Netlink Business Trust, so I've actually prepared more material in our private members channel. So do look for join buttons below. I'll be sharing a bit more details on Netlink Business Trust, my interpretation of things especially. So if you're keen, look for a join button. And with that, let's move on to the second company for today's tutorial, which is Starhub. Now, when I first started investing back in 2005, 2006, Starhub was a market darling. Back at that point of time, it was one of the 3 telcos that was growing in terms of profits and a very steady dividend player. But if you look at charts right now, you realize that it's horrific, correct? Let me pull up the 5-year chart. A massive downward trend is something very obvious that you can definitely see. I'd like to highlight to you the key reason why also, just in case you haven't followed Starhub's story. If you look at this, which I have prepared for you, you realize that in 2019, there was a dividend cut, correct? Before that, dividends was 20 cents, then it's dropped slightly to about 16, 17 cents. But in 2019, the drop was severe and permanent. That was because Starhub's profitability was really evaporating with all the new entrants in competition to its mobile space. And that actually yielded a lot of concerns, especially when Starhub was meant to be a dividend player. That's why in 2018, it was a horrific year for Starhub in terms of share price. It dropped from $3 all the way down to $160, $170. So what we want to do as shareholders always is to look at operations, profits, market share, trends, etc. etc. And the demise of Starhub in 2018 was actually pretty predictable in a lot of ways. I have for you a further chart to understand the story of Starhub. And this summary table over here shows that since 2016, their revenues have been falling, correct? The dark blue bar is actually in telecommunications, which means mobile, pay TV. And then there's a light blue bar that has been growing since 2018. That is actually cybersecurity. So actually in 2018, there was a new CEO, Mr. Peter, and he actually joined Starhub with a mission to really cut costs and really to revive Starhub's business. He actually highlighted cybersecurity is one of the key drives for future growth. That's why there was a lot of acquisitions, which I'll highlight in a while, as well as a focus towards enterprise business. However, Mr. Peter has since left Starhub, and right now there's a new CEO, Mr. Apen. And I'd like to highlight a few key parts because if you were to look at what a CEO is trying to do, you can possibly guess where are resources committed to or where are profits going to be generated in the future. So Mr. Apen has actually mentioned he does not intend to change the strategy significantly, which is a focus towards cybersecurity and enterprises. He understands that digitalization is a necessity and a way to cut costs and be efficient. And they even have an initiative which I'd like to share with you also. This is what they have mentioned, DARE, whereby they not only cut costs targeting at about $200 million, they're also looking in terms of new growth areas. So is there any actual turnaround in business operations from all these growth initiatives? The quick answer is no, not yet. Let me show you this quick chart over here. You realize that mobile has been declining quarter on quarter. You realize that pay per TV has been declining quarter on quarter. You realize that broadband has been growing a little bit, not bad, but enterprise has been kind of shaky. For enterprise itself, first quarter 2021, there was quite a bit of deferment in projects. So I do believe that that's something to track a bit closer, whether that is a temporary drop or the revival for that is actually quite real. So let's zoom in terms of mobile and pay TV, because that is something that you and I, we are a bit more familiar with Starhub's offerings. And I've actually found something very interesting. Take a look at this chart over here. This was actually found from his 2016 annual report. Now it's taken our team many hours to dig through all this material to present a case study for you. So if you benefited, smash the like button and click on the subscribe because we'll be launching videos every week to help you in your financial journey. Now what do you realize from 2016? 51% was from mobile, correct? It was huge there. The second biggest, if not the third, is actually pay TV. Pay TV was also a huge component to profits and revenue. But right now you realize that pay TV is such a pathetically small number and mobile has actually decreased significantly. TV has lost half its revenue, but mobile has lost 60%. So the key question is, has all this price cutting and price war ran its course already? Will 5G be a point whereby telcos bring back control in terms of pricing structure? I think that's something that we need to track very closely. Because when I've reviewed Singtel, I've also realized that they are pretty confident in raising prices for 5G. So perhaps Starhub, through its strategy of cross-product sales and 5G monopoly with Singtel for a while, they are able to revive the revenues and profits from its mobile segment. In any case, the mobile segment has been hit because of COVID-19. There's a lot less traveling and data roaming needs. So back to what it's trying to bundle, you realize that they are trying to really add on a lot of services. One example, Disney Plus. Second example, a partnership with Nvidia to launch a cloud gaming service. So they're really trying to bundle in a lot of services to retain customers and probably attract new ones. But because cybersecurity is a key revenue growth for the future, I'd like to draw a discussion back to this segment of business. I'm not an expert in cybersecurity. That's why I can only share with you what I've learned reading from the various resources. And the first thing, this is actually from IMDA. It depicts who are the various key players in the ecosystem. You see Starhub under the managed security services provider. Competitors would be Singtel, Fortinet, FireEye. There are various segments for cybersecurity, so the whole spectrum of things is very wide. I've actually found this white paper by Cyberscape. It actually mentions that cybersecurity has many international players. CrowdStrike, for example, is one that occupies a particular segment. So if you do know what they want to do, leave in the comment sections. I'd like to learn from you also. But back to the point of cybersecurity, something interesting. You know, this channel we talk about personal finance, and I've actually found through the IMDA website that salaries of top cybersecurity jobs are actually pretty good. You realize that they're paying in excess of 100,000 for cybersecurity specialists all the way to the application security specialist. So if you're new to the workforce, if you're looking to change careers, cybersecurity is a definite place to look at, in my opinion. There's a demand for 1,900 to 3,400 cybersecurity full-time professionals. So look for diploma in that space. Look to get into that space. Look to do a master's if you're looking to do a career switch. So back to Starhub again. You realize that they've been actually partnering, and one of which I found is actually with Palo Alto Networks. Together with them, they're distributing their service. They've actually a new managed secure access service, SASE offering. And with that, they'll actually be able to offer enterprises their solutions, and maybe that's a direction that Starhub would move more and more towards. Coming to this part of tutorial, I'd like to pose a question also. Could Starhub be undervalued as of this moment or not? Because if you look in terms of the price earnings, you realize that it's kind of bottomed out already. PE ratio has increased slightly because earnings have dropped. That's why the PE ratio has increased. But it's actually at a multi-year low. Could the worst be over already? And the second part is, could Starhub one day be considering a merger with M1 or Singtel? And with that, that could drastically change its fortunes. Starhub CEO has mentioned that it's not in the pipelines, but never say never. Because if you look in Malaysia's side, you realize that Celcom and Digi are merging right now. And with that, the fortunes of these two companies seems to be a bit rosier. So there could be pressures also someday. So with that, I ended my presentation. Hopefully you benefited. Smash that like again. And with that, let me invite you to a previous tutorial I've done before, which is pretty interesting. It's on self-driving cars. And as we know, 5G is all about self-driving cars. Two companies are actually in the limelight for self-driving cars, NIO and XPeng. And if you haven't seen my tutorial on that, inviting you there. They have actually very interesting cars, and maybe you could find something interesting to buy yourself one day in future. With that, I'll sign off from here. Take care and goodbye.